Good morning, guys. I hope you're doing well, and welcome to today's edition of the London Session Open. Today is March 7th, 2019, and it's about 4 minutes past 9:30 a.m. in London when we are hosting this live webinar. Uh, let's begin, and we'll begin with the risk disclaimer today. Spend a few seconds on that. I see a few new names here. Jerry Smith, welcome, and Stevenson as well. Okay, good. And I see, of course, some old friends here: Vincenzo, RG, Marvin, Keith Jones, Ivan, and Benny. Guys, thanks so much for joining me this morning in the chat, and thanks so much for joining me for this live market update. If you guys are new to this is the morning update that we host here at ATFX.com, a live webinar. And if you're totally new to me, I used to be the head of the London team of Daily FX, and I was working with Daily FX and FXCM from 2009 to 2016. Then I was working for some other brokers as well, and now I'm the global chief market strategist of ATFX.com. Some interesting things are happening, in particular in stock markets. We're going to address that and sort of see if there can be any implications. But we're going to begin with the euro. And the euro is very easy to read right now. It's just stuck in a range, and there's not too much to do here. I would prefer to see a break to the downside to 112.12. Take that out, and we can probably trade to 109, 109. The difference between the low point and the high point of the pattern gives me this target. Within this range, it's very boring. There's not a lot of activity, and it's very treacherous and difficult to trade any of these sort of ranges. Some people love it, and what they do is then we start to approach the lows, they buy, and if it doesn't go good, they buy a little bit more, and then they buy a little bit more, and then they're on their knees hoping that the market is going to bounce, because if it doesn't, they'll lose a lot of their money. But that is not a long-term sustainable strategy to be consistently adding to your losses in hopes that we're going to go upwards, because eventually one day one gets stuck in something like this or something worse, maybe something like, like a decline from 123 or something like that, and then that's when you blow up. So I like to do the opposite, which is to trade with the trend, and a break here would resume that downtrend. And if possible, I try to add to my position. So the exact same formula that people use to blow up their accounts, I just do the opposite. This is the GBP versus the USD, and I was bullish and suspecting that the market was going to bounce from these levels a few days ago. But as you can see, the market just went straight through and traded below. I think it was 31.40. Was trying to find a level, and down here finding some sort of support. Now, if you look at it from a big picture perspective, the market is trading upwards, and it can potentially take out 132, which would probably end this little downtrend, which is in place since February 27th, and maybe cause the market to resume its uptrend. But the biggest challenge here, and what people have problems with, is that they don't want to be too heavy, long or short the pound ahead of the votes that are coming up next week. First vote is on Tuesday, the 13th, the 12th, and then that will be for Theresa May's deal. If that gets rejected, they vote if they want to rule out a hard Brexit or not. And if they rule out that, then on the 14th, they vote if they want to have an extension. I think most people are thinking that we're going to have some sort of extension, and then we'll see what happens. Dollar versus the Japanese yen is down a little bit, but not too much. I'm quite surprised it's holding up the way it is. We're seeing a bit of a disconnect between the S&P and stock markets and the dollar yen here. What am I referring to? Well, check this out. So this is the S&P 500. And the S&P 500 is literally, it's been moving lower and threatening to take out support. And it looks to me that we could potentially carve out, or we have carved out a high here in the S&P 500, and we might potentially soon start to trade lower. And reasons, I know we haven't properly breached this yet, and it might not be just yet, but something that sort of hints that we'll probably head lower is if you look at something like the Russell 2000. The Russell 2000 is the US, is 2000 small cap stocks in the US. So it's the 2000 biggest small cap stocks, really. Um, so what they do, of course, you have the Dow Jones, and then you have the S&P 500, S&P 500 biggest companies. So if I remember, I think they get rid of all of these. They get rid of 500 biggest one, and sort of go like after those 500, which are the two biggest companies, and that is this. Now these are small companies which have primarily exposure to the American economy, whereas the top 500, they're more like a global exposure, like think Apple and Microsoft and things like that. So here, this could be the prelude, because this tends to be sort of decline slightly earlier before blue stock shifts, because these stocks here, well, they're probably great companies. There are probably a lot of them that are maybe struggling. They haven't really carved out their niche in the market, whereas it's very difficult to dethrone a company like Microsoft or Apple. And even if you dethrone them, they're still going to be making heaps of money and be profitable, most of them. Whereas you can't really say the same about all companies in the Russell 2000. So what happens is that people get rid of the risky stuff first, and the risky stuff is now going lower. So it's a bit of a hint that what may actually come to the S&P 500, and the high here is very close to these highs here. So it would make perfect sense if we actually rolled over. So keep a close eye on this, and we could potentially start trending lower. This is probably going to go down, and if that happens, you might actually have the price of dollar yen most likely be trading down here, 111.27, 111. At that time, though, if one wants to trade this bullish setup, is that you need to ask yourself, okay, if stock markets indeed going lower, do you think they're going to continue to trade lower? And if they are indeed going to continue to trade lower, then we might not necessarily stop here. It could be that we need to go a bit lower, maybe to 109.60 or so, and then go upwards. Because while I think maybe the S&P is going to go down, I think it's probably just going to go down maybe to the first fib or something like this. And around these levels as well, you find these lows here from that we had in October, and then these are in November. So maybe we're just going to go down here, and then we'll see what happens. It really depends on how economic data pans out. If the economy sort of bounces back, we're probably going to head upwards again, and we could potentially trade upwards. And what will be interesting at this stage as well is that you have a massive head and shoulders here. So you got left shoulder, right shoulder, and a low here. And the difference between this level and this level here is about 17%. That will be the whole move, as you can see, from low to high. And then you might have that break here. Now, what's interesting is that what's interesting here is that what can actually entice and cause this to rally that high? Well, if you think about it, is the U.S. and China start to negotiate and start to find a very good deal that removes all the tariffs and then removes other things that allows, for example, American companies to expand in China, and then maybe vice versa, to make business easier, then we could be dealing with, that could be sort of the catalyst here that could open things up, because integration in business roots out, I mean, if there are opportunities, it sort of fixes this. That's sort of the whole cool thing with capitalism, really, that if there's money to be made, and there's usually be money to be made, for example, things that are expensive. And I think whatever you buy and sell, or whatever you sort of, for example, find expensive, there could be maybe like some profit there. And because the market is not really 100% flexible, you can't root that out. And it could be, that there will be efficiency. So say American companies make more money in China if they're allowed to invest there, and then maybe vice versa. So that could be something like a catalyst that one should be aware of. If it's just a simple bland trade deal, then I don't think it's gonna matter too much. This is gold. Gold here remains very close to its lows. I don't think people want to sell here, and that's why we've stuck here. I think if we might go up to maybe 1,300, maybe 1,312 or so, and then I suspect the market may roll over here again. It's only if I think people start to get really, really worried and they say, oh, look, we're going to have rampant inflation and we're going to have maybe a major recession, that I think they might buy some gold. And maybe this is the prelude to that, because some of the economic data has been bad. But I can tell you, I don't think inflation is going to rise quickly, given the way crude oil declined in October from 80 or whatever it was down to, I think, below 50 or whatever it was. So massive decline there, right? So you're not going to have that move and in inflation. And if that's the case, then gold is probably going to be within this big wedge pattern or ascending triangle pattern for longer, which means that if this was the high, we might just go up here and then slide down to 1240, and I think that would be very, very likely, especially as some of the data from the US has been good, and that might force the Fed to increase interest rates. Crude oil prices, they're trading sideways, but a break to 57.89 is interesting. Take that out and we'll probably go upwards. We're still dealing with an uptrend. And some other products like gasoline, which is something I bought myself yesterday, is trending upwards. So moving to new 2019 highs. We're still dealing with head and shoulders, with head, left, right shoulder. The break here opened up for that. And the only issue, though, is that we never really left the area. But I think we take this out probably up to this level here, which is 60, but eventually maybe all the way up here. German DAX. This is the DAX. It's definitely under a bit of pressure. It's definitely taking sort of signals from the US, I think. And we'll see what happens with US stock markets. For now, this is a bullish trend in the German DAX. So I want to continue to be bullish. There are some positive things happening in Europe. Yesterday, we had, I think it was an article, rumors that the ECB is going to introduce new TLTROs. These are just long-term credit offerings to the banks, where they can borrow money from the bank, from the central bank, for a very favorable interest rate. And then these banks can lend this money out. So this is something that was taking up during the financial crisis. Like a lot of Italian banks and most banks actually took some money, and this creates more profitability for the banks. So in the German DAX yesterday, one of the bigger winners was Deutsche Bank, and what's happening here is that is something that could be positive for Europe. More credit tends to be good for risk assets because people get excited about the future. But the question is here, can the German DAX and now the European stock markets deviate from the S&P? I'm not sure they can. But for now, I remain bullish above 11,392. And that, guys, is today's market update. If you guys have any questions, put them in the chat box right now. Looking right now at the questions, and Vincenzo says, audio and video, okay. Thanks so much for helping me with that. That's good. I saw it. And if you guys have questions, put them in the chat box. If you ever miss one of these episodes, just check out our YouTube channel at UK, so ATFX UK. Also, don't forget to check out ATFX, the homepage. We have some analysis there. So you need to choose the UK version or the English version. So it's usually atfx.com/UK/English. And here under analysis, this is going to be revamped hopefully by the end of the week. But right now I'm publishing content under technical analysis. So that gives you a few charts and a few updates. Here, for example, yesterday I discussed several setups to trade the Aussie dollar, and I talked about Aussie dollar Swiss with this head and shoulders, talked about the GBP Aussie with this massive rectangle. So I post a few times here. I also post in another section, which you can't actually see right now, but it's called Market News. And the best way to keep track of that is actually just to follow me on Twitter. You just need to visit AlexFX00. Here I publish these little updates. So here I did a little update on the DAX yesterday, and also just a bunch of other things. As well, if you like the content, guys, don't forget to sort of like and retweet. Let's make that digital footprint bigger. Help me to grow. That's really important because that allows companies like ATFX, for example, to offer this kind of content for free. I do, as you know, as well, do premium stuff, but that's only for members. But with the help of a company like ATFX, for example, I can do all this free stuff. So if you like it, don't forget to share and retweet to help it grow. Okay, I think we're going to wrap things up. Again, you have any questions during the day, just ping me via Twitter if you want to. You also have my email in the chat. You can see it says there, alejandro.zambrano@atfx.com. You're also most welcome to check out the spreads and the benefits of ATFX, FCA regulated broker, very tight spreads. Click on trading, edge account. Don't click on standard. Edge account is what you want to look at. To qualify for this, it's enough to have $5,000 or the equivalent in your currency, and that allows you to trade with very, very tight spreads across the majors and the Forex miners. Very tight spreads across the board. Not only that, for anyone that opens up an Edge account, you get access to 2 30-minute sessions of coaching with me. We do that via GoToMeeting, so we can share screens, talk markets, and I can share a bit of wisdom. And if you have other questions, things like that, you can just ask me. So check that out. They have Forex, metals, oil, indices, cryptos. They got even shares. I don't do too much analysis on shares, but you have it here. Apple, AIG, Amazon, and companies like that. So check it out. Okay, thanks so much for watching, and I'll see you guys tomorrow, same time. And I'll also see you guys in the analysis section and on my Twitter. Thank you.